I'm Robert Graham of the Smart Stocks Online Talk Show. We're putting the spotlight on silver and gold for this edition of the program. Our special guest is David Morgan of silverinvestor.com and publisher of the Morgan Report. David, it's been quite a while. Welcome back to the show.
Robert, it's great to be back with you.
Okay, well, this is a great time to get you on the program because at the time of this recording, David, we have growing optimism that we may be closer to a deal to avert going over the fiscal cliff in the United States. That optimism appears to be weighing somewhat on the price of silver and gold. Gold at the time of this recording coming off a trade that saw the price drop to a 3-month low. Silver has declined at the time of this recording to its lowest level since early November. How are you viewing that, a bit of a pullback in prices that we've seen?
Oh, I think it's all within the time frame and the relevancy of what's going on. Right now, what we've seen is a very similar pattern to what we saw a year ago, where we saw the market fade off into the latter part of December. And we're kind of re-experiencing that one more time, it looks like. Doesn't concern me as far as the fundamentals are concerned. The trading volume has been lighter, but actually not as light as you might expect this time of year, or I would expect, talking to my futures broker this morning. But nonetheless, thin markets like silver that are not traded very heavily at the end of the year are easy to move around one way or the other. There isn't really that much interest in it per se. And the other thing that really I don't think anyone else has probably mentioned, and that is the tax law changes that are taking place within the U.S. A lot of very smart, savvy investors, and then you can go further up the food chain, such as pension funds, managed funds, hedge funds, sovereign wealth funds, that type of thing, are looking at a new cost basis. So it actually behooves them, tax-wise, and I'm not giving tax advice, so it's my opinion, to sell out at 33, 31, 30-something, and gold at the $1,700 level, and then rebuy in 2013 at a new cost basis. And that will prevent a lot of capital gains problems if it was on the new structure going into 2013. So that's something that's not really mentioned much, so there's probably some rhyme and reason for the fact that we're seeing a little waning in prices here.
So
I really do think that that's part of it.
Yeah, does the fiscal cliff have much to do with a lot of the price action that we're seeing lately, or is that an excuse to try to explain why the prices are moving the way they are?
I really think it's more of an excuse. I mean, as far as I'm concerned, we've gone over the fiscal cliff quite some time ago, and it's almost comical to me that I study this stuff so hard, and it's certainly not just me. I know you have a lot of people on your program, Robert, that basically re-emphasize the same points that I do. But it is ridiculous to think that all of a sudden they're very concerned about the problems. Well, where were they, so many years ago? And just to dwell on the point slightly, you look at the Graham-Rudman bill. I mean, basically what they said and that passed, was that you cannot increase the budget beyond this level. But every year they vote to say, well, we'll forget it for this year, we'll move it up. So what good did the law do? Zero, absolutely none. So I'm not that concerned about the fiscal cliff as far as it really causing any real problems. Of course, it's great banter for the political pundits and the financial mainstream. But the reality is we dropped off the cliff quite some time ago.
Okay. Still interested, though, in getting your thoughts on how you see this working out. Quickly, David, do you think we're going to get some sort of a deal before the year end?
Yes, I do. I don't think there's anyone in Congress or the Senate in the United States that has a backbone. I think they're all a bunch of jellyfish, so they'll all concede and kick the can down the road further.
Okay. Now, I've read, David, that you see the potential for the price of silver to perhaps top $50 an ounce next year. What's going to drive it to that level?
Just the facts we went over. Basically, more and more people will understand that we're in the early warning signs of a push toward a hyperinflationary blow-off. I don't expect a true hyperinflation in the true sense of the word, but I do believe there's going to be enough inflationary pressure, or better said, destruction of the U.S. dollar, that will cause the paper prices of gold and silver to escalate much beyond where they are right now. So really, again, an ounce of gold or silver doesn't change, but the price will significantly because there'll be more destruction of the U.S. dollar. Okay,
so this is going to be an investment demand-driven rally more so than an industrial demand rally?
by far. That's what's going to drive silver far, far higher, and gold as well, because what's going to happen is a lot of people are going to see no other alternative. And all we need to see is a doubling in the market. Only 1% of people are invested in this market right now. So if 2% were invested, which is not unreasonable at a market top, that would put tons of pressure on the price to the upside.
Only 1 or 2. That's an incredibly low figure, David. We've been talking for some time now about precious metals, and the metal movement has certainly garnered a lot of headlines over the past couple of years. Yet a lot of people are just kind of sitting on the sidelines and not doing much about it in terms of getting involved.
That's right. I think there's a great percentage of people out there that look at this as kind of a case study in an entertainment value, which is really sad because it's not funny. It's really serious. And yet these people seem to find it to be entertaining to listen to shows like yours. It's like, well, that's really too bad, and geez, I don't need to buy any gold, but sure it's interesting to listen to these problems. It's serious. It's a very serious situation, and there will be a turning point at some point, or a tipping point at some point, where those people that find it as entertainment value actually wake up and do something about it. And when those people rush into the market, it will push the prices again far higher. Okay,
now GFMS, I believe, recently, David, came out with a report, basically saying that they see a pretty significant surplus in the silver market next year. I'm wondering if you're buying into that, and if, in fact, we do have a surplus, does that really matter when we're talking about destruction, in your words, of the U.S. dollar being the main driver in the price of silver?
Well, I want to be fair, and I try to stay objective. Basically, there has been a significant increase in the production of silver in the last decade, and that continues, and I said that in my 10-year report that my members get. That is a fact. But the surplus, and even Philip Clapwick, that put out that study, put the surplus in quotation marks. I mean, gold has a surplus. I mean, there's all kinds of gold above ground. You got about 40 years worth of gold above ground, yet it's always in a deficit. Well, how can that be? It's because the demand is so high. Silver's the same situation. There is more silver mined and recycled that meets all industrial demand.
Right.
So what's left over goes into investment. Well, gold is almost all investment demand. So basically, as I said earlier, investment demand is what drives both the metals. Silver's no different than gold from that standpoint, and it's going to continue up. But if you want to call it a surplus, you can. I don't really see it that way. Supply and demand meet every year, really, is what takes place.
Yeah,
and it's the price that determines where the supply goes and how it's distributed.
What is the smart way to play silver as we look ahead to 2013, David? Is it through an ETF? Is it through owning physical silver itself?
Well, I want to stay consistent. You really should own some, but believe me, the best way to play it is through the mining equities. They have not been so mismatched to the price of the metals in about 3 decades. So that's where you get the most leverage. That's where you get the most value. That's where you're going to get the most bang for your buck. But I don't want to push people into that sector if they don't have a core position in the physical metal first. But if you do, the place to be is the mining equities.
And now those mining equities have really lagged the upward movement in the price of gold and silver, isn't it? There's been a pretty significant gap. Explain that gap. Why do you think we have it?
Well, one reason we have it is because a lot of the managed money wants safety, and so they go to the ETFs rather than the mining equities. And that wasn't available in the last bull market. So if you just took all of the money that's sitting in the SLV as an example, and there's several more than just the SLV, but that happens to be the largest for silver, or the GLD for gold,
right,
and you took that money out and put it in the mining equities, you would obviously see a lot of buying power, and that would push these share prices much higher. But the public that comes into the market later, as we talked about earlier in your show, will be moving into mining equities because a lot of these people love stories. They love story stocks. They love talking about this mining venture and that type of thing. And there'll be sort of an igniting of a paradigm shift. Geez, I got to get something gold. I got to get something silver. Silver's over 50 an ounce. Gold's over 2,000. I missed the train, but I didn't miss this mining company. And so they'll run into these mining companies hand over fist, and you'll see these mining companies explode once we get into the next bull leg.
Okay, well, that's a good way to wrap it up, David. That's all the time we have. Thanks very much for this. Appreciate it, and all the best for the holidays in the new year.
Robert, thank you. It's always a pleasure.
Okay, thanks very much, David. That is David Morgan of SilverInvestor.com, publisher of the Morgan Report, and you can find him on the web at silver-investor.com. And to get all the latest analyst and CEO interviews from Smart Stocks, make sure your contact information is on the Smart Stocks e-alert list. We invite you to fill out the form on the Smart Stocks website. I'm Robert Graham, and you've been listening to the Smart Stocks online talk show where companies come alive. For more corporate interviews and analyst insight, visit us online at www.smartstox.com.